does this high win rate strategy work? So today I'm going to go through with you an exercise that I've just been doing with our traders. I'm in the trading room today and I'm just recording this now with you whilst I'm in with them. And we did an exercise this morning on one of my intraday type strategies, and it's what I call a band play. And so what I'm going to do is just go through some of the results of just a load of back testing, essentially. So we did this exercise, and I'm just going to go through some back testing. So it's an intraday type strategy. So it's actually, this was all based on the euro dollar on a 15-minute chart. Doesn't matter what the actual strategy is. I call it band play. It's a sort of an intraday pullback trend-based strategy, essentially. So buying on a pullback, that's what it is, or selling on a pullback if it's if it's a sell. So let's go through this exercise, because what I wanted to do was to show how you can start off with a lower win rate and how to go about getting a higher win rate strategy. So what we did is we went through a number of risk to reward ratio settings. So it's the same strategy, but looking at it with various risk to reward ratios. So starting off with a 1 to 2 risk to reward ratio over the period, the strategy testing period, that gave a profit of 74% profit, and it had a win rate of 47%. And you would say, yeah, that's pretty solid over that period. It's an intraday. It's over a 10-month period, and it's a solid win rate and profit. However, what we constantly see with traders is they don't like low, and I wouldn't even call that low as a win rate, but lots of traders like higher win rates. So what you can do is you can take your same strategy, and to get a higher win rate, just have lower profit targets. So if we now go to, so what we then went to is we went to a 1-to-1. So let's cut that profit target right down. And the whole point of this is to see if I could break the system by taking it lower. And at what point does the strategy not become profitable? So at 1-to-1, the profit dropped down to 58%. It was actually nearly just under 59%, but anyway. So 58% profit, but the win rate did go up, but only marginally on that one to it went up a bit to 54%. So all of a sudden, you got yourself back above 50% as a win rate. Okay, fair enough. You're now at 1-to-1, still profitable. The strategy is still profitable, just not as profitable. But again, some people just would almost at all costs, and there's been many psychological experiments where which have proved what human beings do. One famous experiment was a group of researchers went out, it was in New York I think, and walked amongst the public in Manhattan and were giving out $10 to people. And they were saying, look, I'll give you $10 now, or I'll give you $20 in a month's time. And by far the majority of people opted to take the $10 now. So it's in our human nature, because it goes all the way back thousands of years. When it comes to things like food, what would we rather do? We'd take it now because we don't know when our next meal's going to be. It's why your pet dog is always hungry and always wants to eat, because they don't know when their next food's coming. Fast or famine. So anyway, and it's the same sort of psychology that goes on with humans as well, and that's why we have this similar sort of thing with people that struggle with obesity. Sometimes it's because they're just have a slightly different wired, and they may have a greater propensity to gorge on food, if it is, the obesity is down to that. So not all obesity is, but anyway, back to this. So people will take it, instant gratification, that's what they want. So then we carried on with this exercise. So we said, okay, well, what if, ran this test, what if we actually went inverted? So a bit like Maverick and Goose in Top Gun, and he's doing an inverted 4G dive against the MiG. And at what range were you at, Maverick? About 2 meters. Sorry, that's an old gag. I went through that gag this morning with the guys in the room, and it didn't get many laughs then. So why would I get any laughs now when this is going out to YouTube? So 1 to 0.8. What the result of that one came out at the win rate went up a little bit, but the profit obviously carried on coming down. So the profit is now at 38%. But for those people that want that win rate, the win rate went up to just about 58%. So for those traders who want the higher win rate, then you can see the profit that they will sacrifice, a bit like those people who will sacrifice having been given $20 in a month's time. They'd rather take the $10 now. And there'll still be plenty of people who would do that. It's still profitable though. The strategy is still profitable here. But anyway, then we continued and then it got interesting here. So now we're going even further. We're going to go more inverted. So 1 to 0.5. So for every 10 pips you risk, you're only banking 5 pips. That's what that is when we're going inverted. Okay. So now at this point, the profit comes down even further. Exactly what I would expect. I would expect the profit to come down further, but the win rate to go up higher. So the win rate was now at nearly 66%, just under 66%. So you would expect that because you're taking less profit for the guys. I am watching the price here, by the way. So we've got a trade coming up on the euro dollar. Fun enough, while I'm recording this, so we're getting close to taking a trade. I'll press pause while I'm doing that because this isn't live trading video today. That's on a different day. It's not me this week. So that gave us 66% because it's banking its profits sooner. So for people that want to have the higher win rate, they're again sacrificing a huge amount of profit just to make themselves feel good about being right more often. Comes back down to our basic human nature of wanting to be right when it comes to things like this in trading. So then we pushed the boundaries even further and we went down to, well, what if you're looking at a 0.3? So for every 10 pips you're risking, you're only looking to bank 3 pips, or just over 3 pips. So interestingly, the profit actually went up and it went back up. It went up to 33%. And the win rate, because it's now only trying to bank 3, went to 74%. And this is where it gets even more interesting. I've got some comments to mention here as well on this. So then we said, well, at this rate, we might as well carry on. So then we went to 1 to 0.2. 1 to 0.2. So for every 10 pips you're risking, you're only looking to, you're going to be banking at 2. Now, obviously that wouldn't be realistic, but I'm just in the real world, but I'll explain that in a moment. So then the profit went up even more. So it bottomed here and it went up to 41%. Hopefully I've got that right. Yeah, 41%. And the win rate carried on going up, I think, up to 79%. Okay. So we've now got a very high win rate and ironically the profits. Now a lot of people on paper at least would be saying, well, I'll go for this one, Charlie, because I'm right much more of the time. I'm still making money, nowhere near nearly half as much as just running at 1 to 2, but again, it says a lot about their own psychology, as traders. And what we want to do as much as we can as traders is to try and, on a strategy like this, is trying to be at trading at what is most profitable for the given strategy. What is most profitable for this given strategy is a 1 to 2, as we can see. And we have to sacrifice and we have to accept being wrong more often. Now, but for the person who says, no, Charlie, I want this one down here. The problem is, bearing in mind this is a setup based on a 15-minute chart, which probably means the average stop loss is probably going to be about 15 pips. I'm making this up a little bit, so don't quote me on that completely. But if you've got an average stop of 15 pips and you're at 1 to 2, quote me if I'm wrong, but that means that your target on average is going to be about 3 pips. And some of you will be saying, yeah, well, what's wrong with that, Charlie? Nothing's wrong with that. But you've got to allow for spread and slippage on your trading execution. Now, spread and slippage, when you're targeting 10 pips even, or 20 pips as a target, becomes less of a factor. But if you've got to take into consideration spread and slippage on something which you're supposed to only be targeting 3 pips. Now, the backtest engine, when one of our members did the backtesting for us on this, that's not taken into consideration spread and slippage. So realistically, then, if you are going to be looking for 3 pips net, you've actually got to be looking for closer to 4 pips in order to net get 3 pips. Do you see what I mean? So realistically, this isn't realistic. You won't get those figures because that's based on just on the chart, and it's not factoring in those sort of real world circumstances of spread and a bit of slippage here and there. So it's not going to be 79%. It's more likely going to be 74 and 33. Even if this is what you're targeting, the reality is that won't happen. So the problem is the lower you go, especially with an intraday. Now, if you're doing this on higher time frames where you're still looking to make 50 pips or whatever, then you can afford that 1 pip of spread or half a pip of spread or whatever. It's not really making much difference. But if you're only targeting 3 or 4 pips, it's a massive percentage of your profit. So this is why on these intraday sort of time frames, on paper looks great, but you wouldn't ever go there. So some food for thought there today. Just taking a given strategy, so we've taken one of my strategies, and just looking at a variety of risk rewards, which then give a variety of win rates, and why win rate is not all encompassing. Win rate, and I know so many people get caught up in win rate, but it really, really isn't. It's nice to have a higher win rate, of course, and certain strategies do have high win rates, and they're highly profitable as well. But it's only one part of the equation, and it will work with some strategies, and it won't with others. And I've just pointed out here that especially on an intraday strategy like this one, that something like that would quickly fall over, even if it looks good on paper. So you're better off being further up the table there. Anyway, some food for thought there today, and hopefully that video is of some use. Take care. I'll probably do another one out to you at the weekend. Take care for now.